Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion today, we want to say thanks for questions coming from our audience at SmithWeekly, including Mike P., Cindy W., Andy S., Mark R., and Jake V. On the program today is a returning guest. We are welcoming back Mr. Luke Alexander. Luke is the president and CEO of Newcore Gold. The company is focused on development of its Enchi Gold project in Ghana, West Africa, which is in the pre-feasibility stages, evaluating a potential gold mining operation targeting about 120,000 ounces of gold on an annual basis, with further potential to expand the production profile in the future. Newcore Gold is listed on the Toronto Venture Exchange under the symbol NCAU, as well as on the US OTC markets under the symbol NCAUF. Luke, welcome back to the program.
Yeah, hi Andrew, great to be on. Thanks for having me.
Yeah, it's a pleasure, Luke. And we haven't talked here since May, so that's right at about 7 months ago. The company has been working on a number of tasks at the Enchi Gold project. First, I want to jump onto the drilling work that has been ongoing. Talk a little bit about what is left to go here, the results that have flowed out over the last 2 months or so, some really good results coming out on some of the drilling that's happening there, as well as what your expectations are to wrap up the drill program to expand resources, of course, and improve that confidence level.
Yeah, so in July of this year, we announced a 10,000 meter drill program. That program fully funded from the warrants that were exercised. About $3.3 million came in from that. And then we raised an additional $5.5 million of cash at the beginning of September. So 10,000 fully funded drill program. Of that 10,000 meters, we've currently completed about 3,400 meters, or we've released results for 3,400 meters. That's 21 holes from our Boeing deposit. So we've got about 2/3 of the drill program still to come. As we get batches of results back, we typically put those together and then release them to the market. So over the next number of months, we'll have lots of drill results coming out from a news flow perspective. And of the 21 holes that we've released, and that came out in 3 separate press releases, 2 of them in October, 1 of them in November, we've had some extremely positive results. In our last news release, which we put out in mid-November, we actually had the highest grade width intercept ever on our project, 204 grams over a meter. And that intercept was only 60 meters below surface, so still relatively shallow from a drilling perspective. And then within that same press release, we actually intercepted almost 3.4 grams over 28 meters. Again, that hole was relatively shallow. That intercept was at about 125 meters below surface. And within that intercept, we actually had 11 meters of almost 8 grams per ton. So very encouraging results with some of this drilling that we've been doing as part of the 10,000 meter drill program. The rig has now been moved over to Sium, which is our largest deposit, and we're doing some drilling there. So expect some additional results from Boeing, as well as results from our largest resource area, Sium.
Luke, it sounds like you guys will have at least a few more months with the drill turning here on the project areas. First of all, good results here. And based on what you guys have been turning up with results, any tweaks planned for the program, or you guys going to stay essentially on your plan to finish up and then, of course, come back and follow up with some of these interesting results you are getting? Just talk about some of the field tweaks that might be happening or what the plan would be, assuming continued success, you guys coming back, following up, and continuing in 2025.
Yeah, so obviously when you hit 204 grams over a meter, 60 meters below surface, and that's on the outer edge of the section of holes that you've drilled, we're going to want to get back in there and do some follow-up drilling to see what's going on in that area and see if we can find some more of that high grade. So that's something that we'll look at doing. And then the other thing in terms of, I guess, tweaks or changes, one thing we've also done with some of the drilling, and you'll see this within some of the drill results that we put out in October, if you're looking at our press releases. On October 8th and October 30th, we put out drill results, and holes number 288 and 294, which we highlighted within those press releases, these are holes that hit good mineralization within the pits, so infilling what we were hoping to infill. And then what we did with those holes is we actually pushed them beyond the pit boundaries and had good mineralized intercepts beyond the pit boundaries. So we ended hole number 288, for example, in 28 meters at 2.2 grams. Hole 294 ended in 2 grams over 11 meters. So that's mineralization that is currently sitting outside of the pit constrained resource. And that's one of the things we've talked about is how, yes, this drill program is focused on converting ounces to the indicated category, which is one of the key requirements for us to get a PFS completed. But then beyond that, we also want to focus on resource expansion. So the ability to push these holes deeper and beyond the current pits that constrain our resource will ultimately accomplish that goal of adding some ounces in these additional areas. So we're very pleased with obviously the conversion that we're seeing, but also with the potential for resource growth with these holes going beyond the pits.
Luke, thank you. And this is getting into expansion, the upside that was unknown, which I want to come back to later in the discussion here and talk a little bit about that, because I do think that there is upside here just beyond what you guys are moving forward on the development front. So we need to talk about that. On the money side of things, another news piece over the last couple months, you guys completed a 5.5 million financing in September, and you also had warrant proceeds of about 3.3 million during July. This is all Canadian dollars, of course. Cover where we are now on treasury balance, where you would expect us to be post existing drill program, and then how far you see this carries the company in 2025, Luke, as well as, of course, the current shares outstanding and the ownership.
Yeah, so what we typically do when we raise capital is we look to lay out a 12 to 18 month budget. So if you look at that financing that closed at the end of September and you kind of go 12 to 18 months from there, that takes us into first half of 2026. That's how we lay out our budgets on the back of financings. In terms of the financing itself, as you mentioned, we went out for 5 million. We had very strong demand, so we ended up increasing that to 5.5 million, so we didn't have to cut people back too much. And that financing, we actually brought in 6 new institutional investors, a combination of a couple of investors out of Europe, one out of the Middle East, 3 out of North America. So those 6 institutional investors complement our current institutional investor base, which makes up about 45% of the ownership of the company. So great to have continued support from deep-pocketed, long-term focused, primarily mining and precious metals investors who recognize the tremendous district scale potential of our project. But also, when we go through the economics of the PEA that we put out in April of this year, they see the huge underpinning of value that the Enchi project has, as well as the tremendous re-rate potential as we take it from a PEA to a PFS. And if you want, we can get into some of the valuation metrics around that and how a lot of these investors look at the re-rate potential of de-risking the project from a PEA to a PFS and then ultimately putting it into construction. So really strong support from our existing institutional shareholders as well as the new ones who came in as part of that financing.
And it shows, I think, as well that there's good demand here in a pretty soft market. So I think that points to the success of the company moving things forward here as well. And then that valuation staircase essentially here as you guys move into the next stages here, which would actually probably the most exciting stages, in my opinion, for a developer. So I appreciate that. And we'll talk a little bit more about that here in a moment. Luke, you brought on board some new staff at the company. You've recently added Alan Prangborn as strategic advisor. Talk about that addition, of course, the importance, and as well as any other staffing work ongoing.
Yeah, so Alan, 35 plus year career in the mining business. He's got a very strong track record with a number of different operators. So he was the COO of SSR for a number of years. So building and running multiple mines around the world. Prior to that, he worked in South America with Kinross again, operating and building mines for Kinross. And then prior to that, he was 15 years at BHP, again, building and operating some of their biggest mines on the planet. He has a lot of experience in heap leach operations. So he's built and operated both gold and copper heap leach mines. And then by training, he's a metallurgist. So that skill set obviously complements Greg Smith, our VP Exploration, very well as Brandon Fraser, our VP of Projects. And when you look at kind of Alan's track record for us at Newcore, to be able to leverage that type of experience will be very valuable as we work towards putting this PFS together. And one thing I'd point out is that, Alan sought us out as much as we kind of sought him out. He saw our project. We had met with him. He went through it in a lot of detail. He really likes what he's seeing at Enchi. He's excited about the opportunity to take it from a PEA to a PFS and into production, and sees the tremendous value that can be created through that process. So we're very lucky to have someone with his experience so keen on our project and wanting to join the team to help us take it to our goal of bringing it into production. So he's been a tremendous addition thus far.
It's important to point out some of these additions here in the sense that Alan not only has that expertise on what you mentioned, but he also has that network as well. The two outcomes potentially here: an outcome where the company builds and goes into production, and of course the outcome where somewhere along the line on your pathway to that production, the company gets bought out by suitors that are out there, mid-tier and majors out there that have focus in on Africa. So I think that all of that component is important, plus ability there on that front and his M&A experience. So I appreciate that as well as yours.
I think the reference you're making there is to Guyana Goldfields. So Alan was the CEO of Guyana Goldfields. He started as a director. The company, had a few bumps along the road. Alan got appointed as CEO. He took the company from I think 30 or 40 cents, had multiple bidders come in and eventually sell the company to Zijin for about $1.80 a share within a 9 to 12 month period. So I think that's the reference you're making is yes, Alan has obviously got a lot of M&A experience as well, and specifically with Zijin, who we've seen come into Ghana in a big way. That could be helpful at some stage, but really, his technical expertise is first and foremost the thing that we're focused on. But obviously, that M&A experience, specifically with Chinese groups, is something that down the road could be helpful, given the appetite that China has to get into to Ghana, and we can talk about that as well if you want.
Look, we know it's a great jurisdiction. I'd reference the audience back to the conversation Luke and I had earlier in May. We talked about this. Ghana is a fantastic place to be doing business. If you're in the mining business, this is a very important piece of the country's economy. It's fantastic for career building. It's fantastic for wealth creation. With respect to, I want to ask you this now that you bring up the Chinese interest in the region. As a Canadian junior, as you well know, a lot of these juniors over here are Australian domiciled or Canadian domiciled juniors. And we've seen increasing tension, if you will, with respect to M&A transactions for a Chinese mining company. We've seen this pop up maybe a little bit in South America recently, Luke, as well. You follow this stuff because you look at a lot of the peer companies and a lot of the transactions in the space. But how do you think some of the regulators now look at, a Canadian domiciled company with a project in Africa being purchased by a Chinese company? Do you think that that is an ongoing concern, or is it a case by case? What's your thoughts on that?
Case by case, but I'd actually reference it. It's more commodity by commodity. So depending what commodity your project is focused on will ultimately, in my view, dictate the interest level from the Canadian government. So Canada's come out and said that any strategic materials, so copper, lithium, those are going to come under increased scrutiny from the Canadian government. Gold has not been classified as a strategic material, so I don't anticipate the same types of issues we've seen for some other companies. And I think the one that we can point to is Osino. I'm sure you and a number of your listeners followed Osino. It ended up having a bidding war between Dundee Precious Metals and then Yintai, which is a Chinese group, eventually ended up buying that, and that deal closed earlier this year. So I think that's an example of a gold project sitting in Namibia that was listed on the TSX that ultimately was able to get through the approval process. Again, primarily because gold is not considered a strategic material based on the definition of the Canadian government. And then the other one I might just point to, and Andrew, this isn't a Canadian company, but it is the biggest mining company on the planet, Newmont. So if you again look at Ghana and you can go look, we've updated our presentation and it goes through a number of the recent transactions in Ghana. But you've got Newmont who has sold their Akim mine, which was Newmont has two mines in Ghana, the Ahafo mine, which they're putting another $1 billion into and is going to take it over 1 million ounces of production per year. They then had a non-core asset, which was one of their 8 non-core assets globally, called the Akim mine in Ghana, and they just sold that to Zijin for $1 billion. So, assuming that deal closes and goes through, and I haven't heard anything to say it won't, there's a U.S. company selling a mine to Zijin. So again, I think that points to the strategic relevance of gold in the regulator's eyes.
Very good points to add to these issues surrounding regulatory and M&A, and then of course the two transactions.
Montage would be the third. You'll see that Zijin has just come in and made a strategic investment into Montage as well. So sorry to cut you off again, but we've got lots of examples, and I think it's a very good point you raise, because it is, I would be very concerned these days if I was running a copper company with listed in Canada.
Well, but of course, I started talking about the Solaris as well as some of the challenged ones out there. And nonetheless, I do see your points here with respect to Africa, the gold companies specifically, and then the examples you provided. Appreciate that. And it's good to get your opinion because you're one of the few CEOs out there actually wrapped up into these transactions, comparables, advancing, of course, Newcore into what potentially could be a good outcome in the future here. So I wanted to bring that one up and get your thoughts. With that, Luke, I want to come back to NCAU for a moment because we're at the end of the year here. Talk a little bit about how you see the schedule going in 2025 as far as milestones that you want to accomplish. Maybe you can speak roughly to the timing of that pre-feasibility study, as well as what you see as the next key steps on that construction pathway. And if you want, talk a little bit about financing, construction financing, and also permitting. I know this is early, but permitting necessity than some of the financing needs at this moment.
Yeah, so we're in the process, as we've already discussed, of drilling 10,000 meters. So we'll continue to get those results back compiled and put into our models. We're also doing a lot of other kind of de-risking work. So we're doing hydrological test work, geotech work. We're continuing to do a lot of metallurgical test work on the project. We're doing some additional social and environmental work on the project. These are all kind of critical elements to move us towards a PFS. So we've had our key consultants that we're looking at working with for our PFS. We've had them run gap analysis. So going through all of the data that we've got for the project today, including obviously the PEA that we put together, and having them review that data alongside us to come up with, okay, what is the key list of items that need to be completed between now and when we want to start putting that PFS together. So we're working through all of that at the moment, and the expectation is to get the bulk of that work done by Q3 of next year. So call it 9 to 10 months from now. And then on the back of that, obviously it takes a few months to start compiling and putting together a full 43101 compliant PFS. And we would look to get that released in the first half of 2026. So that's kind of the path we're on at the moment.
And speak just a little bit about what you see, just to remind the audience, we talked about Ghana just briefly. It's a great jurisdiction for gold mining. Talk a little bit about how you see the permitting pathway going as far as timing. Just give us a little bit there. I know that it's rough and it's early days here on the permitting, but talk a little bit about what your expectations would be on permitting. And do you think it's feasible to have the potential for this company to be in early production ramp up phases, say in late 2028? Would it be in 2029? What's your thoughts as far as realistic timing, given the gold market, given the pricing out there, given the capex of this project, and at least in phase one? How do you look at this in terms of the potential speed if you guys chose to pick up the pace?
Yeah, so I mean, as you know, Andrew, a lot of factors go into how quickly you can get something done. Our expectation is we would be able to get it permitted alongside the PFS work being completed, and then working towards a BFS. So our expectation is we could get the permits completed during that stage, and then would look to get it into production at some point in 2028.
Excellent. And that's pretty much, I think, a good pathway here. And, there's little you can do on acceleration. I mean, if it was a perfect market and you could raise capital to accelerate some things, I could see how there might be some opportunity to do that. I wanted to ask you a little bit about another key area here, which you guys are starting and you guys will continue to bring up as you progress the project through the permitting phases and getting everything through up to bankable feasibility. Talk a little bit about the expansion of the project and the mine life improvement that you guys obviously are seeking here through the drill bit, and then how you look at that upside while you guys continue to work through the development stages, because as you well know, these development stages for these development companies are typically kind of a boring period. It's Lassonde curve type thinking here, but you guys obviously have the ability with this project to have good exploration success, increase of resources, and then also subsequent reviews of mine life and how you guys look at the production profile. So talk about how you see that evolving in the coming years.
I mean, when you look at from a valuation perspective, I guess where Newcore is trading today relative to the value of the project. So if we use, let's say, 2350 as a gold price, which is roughly 250 $300 below where gold is trading today. But at 2350, our project, which we outlined in the PEA, has an after-tax NPV of roughly $630 million US. That compares to a market cap today of roughly $50 million US. So we're trading at less than zero point 0.1 times the NPV of the project. So a lot of our institutional investors and new investors who came in, they recognize that there's a disconnect between where our company is trading today and the value of the project that we've got. Typically, PEA stage companies, when I talk to investment bankers and analysts and others, they tell me they should trade, between 0.2 and 0.3 times the NPV of the project. That compares to us trading just below zero point 0.1 times the NPV of the project. So you can see the re-rate opportunity that there is with the market just pricing our project appropriately in the market today. Beyond that, and one of the motivations for us to take it from a PEA to a PFS is, PFS stage projects typically trade around zero point 0.5 to zero point 0.6 times the NPV of the project. So again, from where we are today at below zero point 0.1 to re-rating towards where PEA projects typically trade, which is in that zero point 0.2 to zero point 0.3 range. And then beyond that, as we get a PFS completed, 0.5 to zero point 0.6 is where projects typically trade. So I guess, in terms of the motivation and rationale for us, taking it from PEA to PFS, that's really the rationale, is that there's a significant re-rate opportunity um, for the company and for the stock as you move down that de-risking path towards a PFS and then ultimately into construction. When you look at it from an M&A perspective, I mean, if we look at two recent examples in Africa, again, Osino and OreCorp, both of those companies got taken out at zero point 0.6 times the NPV of their projects. So again, that's the kind of path that, we're looking to take this company along over the next couple of years, and see a tremendous amount of value that can be created as we move along that path. In terms of beyond that, which we don't need to discover any more greenfield ounces to accomplish that. Obviously, we need to convert some ounces from the inferred to the indicated category to be able to compile our PFS. But beyond what we've got in the ground and defined today, we do have true district scale exploration upside. So if you look at our resource today, it currently sits within pits that average only 75 meters. So we've still really just scratched the surface in terms of the exploration that we've done. We've only drilled on 9 of over 25 targets that we've identified on the project. Our deposits do remain open along strike, so systematically stepping out and looking to find additional near surface ounces is something we'll focus on. We've identified a number of parallel structures at our existing resource areas that, again, will warrant additional follow up drilling. And then beyond that, the thing that we're very excited about in the mid to longer term is the opportunity at depth. So when you look at these greenstone hosted deposits along the Sefwi Bibiani belt from us, including Chirano at 5.5 million ounces, Bibiani at 6.5, Ahafo at 20 million ounces. Where you see a lot of these deposits really grow in size and increase in grade is as you start to get deeper and identify these high grade feeder zones. We've identified a number of those types of feeder zones on our project that will warrant additional drilling given the discoveries that we've made. And that's something that we're also excited about in the mid to longer term. But for us, the focus and where we think will create the most value at the moment is the de-risking from PEA to PFS and ultimately taking it to production.
Absolutely agreed. I think that has to be the first and foremost focus of the company. But also, as you guys get down the road here a few years into the future, Luke, you guys get closer to that production. That also, this package that you guys do have, people I think have to start to look at as you guys demonstrate this through the drill bit. They have to start looking at what does this project look like with that success. And you guys are starting to demonstrate, just as you said, scratch the surface of that additional potential, in the sense that this can become a larger operation potentially, could be future expanded, production profile different, mine life potentially different. And so it's good for folks to at least take a look at that, because I think you guys will be demonstrating that in the years to come here as you guys get into definitive and construction decision and those things as well. With that, I want to just add too, you guys have conservatively estimated in the PEA recoveries in the lower 80s percentages. Also, take a look at what you guys have been able to do with additional test work. Just give us a flavor of what you would expect to see on recovery improvement with ongoing test work and how that would fit into the pre-feasibility study. What's your thinking on the improvements that could happen there, as well as any other efficiencies?
Yeah, when you look at the met recoveries that we're getting, within the oxide transitional material, in the columns and bottle roll tests that we're doing, they're averaging around 92%. So there is an opportunity to, increase potentially the recoveries within the, oxide transitional material, as well as in the sulfides, which we're doing additional work on as well. But Andrew, the nice thing is we don't need to have any improved recoveries in future studies. I mean, the economics of the project as they stand, today, are so compelling that it makes sense to take it to a construction decision as quickly as possible. Yes, down the road, being able to potentially, increase recoveries a little bit will ultimately help. Things like crushing, we're currently assuming crushing across 50% of our transitional material, but there's an opportunity there to potentially reduce that to maybe 20% on being crushed. So there's lots of areas where we can, potentially improve things. But I would also, say on the flip side, there will also inevitably be other areas where some additional costs will creep in. So typically what we've taken is the approach to be conservative, and that's, I think we've added a lot of conservatism into the PEA that we put out. In the future, yes, there'll be opportunities for us to optimize and cut some costs and increase some recoveries, those types of things. But inevitably some additional costs will come in, and that will then offset those additional costs and additional areas that need to be addressed. But as the PEA stands today, again, the economics are so strong that the project can withstand a lot of kind of additional costs, but we think we'll be able to also offset those with a number of optimization opportunities that we've got within the project as well.
Yeah, I think it's good to have those opportunities because, as you said, cost escalation is definitely going to be factored in. That's definitely no doubt coming over the next 4 years or so for this project. But also the way you guys can wash this out or offset it with those efficiency improvements, which you've already started to demonstrate, even though they're not written into the formal studies yet, Luke, I think are important to offset that and combat those escalation parts of it that'll come in here as well. I want to go back to the valuation staircase, if you will, as well as your understanding of some of the peers in the area, the comparables. Of course, we've talked some of the M&A transactions there in Africa, Central Africa area as well, and Southern Africa. And obviously, there's going to be plenty of opportunity for the company to be bought out in the years ahead and even leading up to production, Luke, as you well know. We talked a little bit about the conditions for M&A. As we watch some of these transactions, you see these companies, the junior companies, progress these projects to a certain stage. You've seen takeouts after construction finance package in construction. You've seen takeouts earlier than that, definitive bankable feasibility studies. It varies a little bit, but generally we're seeing mid-tiers and majors. Maybe my thinking is not right on this. I think it is, but you're seeing everybody wait until the de-risking continues, permits in hand, maybe finance package gets in place. Talk about where you see how you see it generally, the M&A space first, with respect to the point at which that takeout occurs, and if you think it's further down the road. And then also, where do you see the best M&A deal, if there was one? I know that we're speculating here, but if there was a takeout, where do you think that would come, in your opinion?
I mean, I think you alluded to it. I mean, PFS and FS stage projects are the ones that seem to be getting taken out the most. Again, that goes right back to your other point, which is de-risking. Typically mining companies like to see projects fully de-risked or de-risked as much as possible so that, they're at a point where they can literally come in and build the project. So all the hard yards have been done in terms of the studies, the permitting, and the ability to just come in at that point and start building the project and put it into construction is, I think, the stage that's most desirable for companies. I mean, if you look at Cardinal Resources, for example, that was an ASX listed company with the Namdini project in Ghana. There was a bid for that company by Nord Gold back in 2020. Shandong then came in, and there was a full-on bidding war between Shandong and Nord Gold, with Shandong eventually winning out and closing that deal in 2021. So again, Cardinal and the Namdini project was at a feasibility stage. Shandong came in, bought the company for US $450 million. Fast forward 3 years later, Shandong is now about to pour first gold on the Namdini project. That's going to have in the first 3 years of production, 370,000 ounces and 350,000 ounces over the life of the mine. So, that's an example of feasibility stage project where a company can come in, buy it, shovels in the ground, and have it in production within 3 years. And it's important to also highlight that that's a huge project. 350,000 ounces of production is a very large project. So the amount of time to build that is considerable as well. So I'd say feasibility stage, PFS stage would be where companies like to get involved the most. Obviously, first and foremost, companies are out there looking for production, but the reality is those opportunities are very limited. But when they are available, and what we saw with Zijin buying the Akim asset for $1 billion, is when those production opportunities are available, they go for a very hefty price. So yeah. So again, I'd say feasibility and PFS stage project is what's most desirable for companies.
Most certainly. And you have as well, I think you have another component here, which we overlooked a little bit here, Luke, was that the market conditions and the opportunity for these mid-tiers and majors to take, sure, some more risk, but also at a lesser price to come in and take these companies earlier. And we're not seeing so much of that anymore, unless it's something just absolutely crazy with respect to discovery success. But we're not seeing that risk taken too much, even though the market conditions for the smaller juniors are pretty poor. And I want to ask you about market conditions in a moment. But I think that's another piece where you could get a company like potentially, if management agrees and shareholders agrees, a smaller junior at a better price, even pre-permitting, pre a lot of that de-risking work. And so there is that trade-off piece as well. But I do think where you guys stand today, you guys are already walking up that staircase. You've already got a few steps past you already. So, and you can see that also in your guys' performance of the stock. I guess coming back to that, plus any comments there, Luke, is just I wanted to get your general thoughts on the gold market and conditions out there for juniors, as well as how you see 2025 shaping up for the junior natural resource sector.
Yeah, so I think the market has, despite gold hitting all-time highs, has remained, challenging from a financing perspective. We have started to see, a fair bit of M&A happening, so I think that is very encouraging. And from that perspective, as we see M&A, there typically ends up being a waterfall. Companies and investors get cashed up through the acquisition of projects and companies, and then that money is looking for new investment opportunities in the space. So for us at Newcore, we haven't stopped working on our project. We've been very active the last number of years. I mean, in the last 4 years, we've done more work on the Enchi project. We've drilled over 95,000 meters. We've put out a couple of resource updates. We've put out a couple of PEAs. We've grown the overall size of the resource, and we've significantly de-risked the met in a number of other areas. So we've really accelerated the project over the last 4 years beyond all the work that had been done in the 25 years prior to that. And with all that work, my view is that, as the market comes back and that all that work and that's been done on the project starts to get properly priced into the stock, there should be a quicker re-rate. So we've been fortunate that we have been able to continue to aggressively work on the project despite a tough market. And I think that should create a much quicker re-rate than you'll see with a number of companies who've unfortunately had to be dormant just because the market hasn't hasn't seen the opportunity in their projects to fund it, and really they've just had to stop work and just keep their listings going. So I think we're well positioned for a re-rate as the market comes back.
And that is the difference. I mean, a lot of those companies, as you well know, there's been a lot of juniors out there that have fallen into that trap. Unfortunately, just the investor capital hasn't been there to continue. And so they've had to go into kind of care and maintenance mode. So I appreciate your thoughts on how you see this. And of course, 2025 should be an interesting year for the sector, probably more so than 2024. Just on another topic, Luke, on the awareness front, and of course, efforts out there to bring new investors into the Newcore story, as well as adding further analyst coverage to the company, what can investors expect on this front during 2025?
What we typically do on the awareness side of things is we try to spread our dollars out as much as possible. So we obviously look to target institutional investors, and obviously we've had a number of them come on board, which are reflected in our 45% institutional ownership. We then obviously try to engage with retail and high net worth investors as much as possible. I mean, if you're not already signed up on our various social media channels, then I would highly recommend that you do. So we're very active on X and LinkedIn and Facebook, and we have YouTube videos out there as well. And we get lots of good content and very good feedback from a number of investors on the amount of content that we put out there to keep people engaged and updated on what we're doing on our project. So that's an area that we focus a lot of time and effort on. And then obviously interviews like these and other interviews, we try to get as many of those completed as possible, or we see make sense. And then geographically as well, we typically try to focus on North America, but then equally focus on Europe and other parts of the world to again try to leave no rock unturned in terms of the investor audience that's out there and potentially could be interested in Newcore. So those would be kind of a few of the things we do, and the approach we take in terms of obviously engaging with a lot of different types of investors and different markets. From a research perspective, we've obviously got Justin Chan, who currently covers us at SCP. Don over at Paradigm, Don Blythe, he's added us to his Takeout 20 and is following the company quite actively. And then we obviously know a number of the other investment banks and research analysts out there who we engage with to ultimately see if there's potentially interest in the future to pick up coverage. So specifically on your question about research, that's how we tackle things.
Luke, thank you for that. And I think you guys, obviously, there'll be more discussion on that front of research and analyst coverage coming in 2025 as the company continues to progress these milestones. So appreciate your thoughts on that. I think it's a very important piece. I think you guys have done a pretty good job in 2024 as well in working towards that end as this project moves forward. Well, Luke, short of anything else you want to add, let's leave it there for now. And I'll leave you with this final question as we wrap up. For potential investors who are listening in, the company has a market capitalization of about 67 million Canadian dollars. Why should Newcore Gold be considered within the institutional, family office, and retail investors' portfolio at this stage?
One thing we haven't talked about is shareholder alignment. So management and board, we own 18% of Newcore Gold. That's money that we've invested alongside shareholders over the last number of years. So we're truly aligned with shareholders and ultimately want to see the company succeed and see a tremendous amount of shareholder return. So shareholder alignment, I think, would be one of the critical elements. The other is obviously we have a project that we've wrapped economics around that show a tremendous amount of upside potential again, at 2350 gold, we're looking at $630 million after tax NPV, 92% IRR, and a 1.1 year payback. I mean, I'd challenge you and any of your listeners to go find another company that has a project with economics as robust as ours that sit within a $50 million company. So, we're fundamentally underpinned by a very valuable project with district scale exploration layered on top of that. So, management and board alignment, along with a project that at the moment, in my view, is being deeply undervalued by the market. So, those would be the two key things I would point to.
I encourage the audience to potentially find some of those companies, and I think Luke challenged us with that last time, and it was quite difficult to sort out. But anybody in the audience, please bring those forward if you have some. Also, do the same in the meantime. Luke, thank you for that. And what is the best way for folks to reach out to the company?
I mean, through our website, you can email us on the various again social media channels. I would encourage you to subscribe to those. So yeah, or Andrew, any of your listeners can get in touch with you, and we can get on a call together and go from there. So we're always keen to engage. So on our contact page, feel free to email, and I'll get that email and yeah, talk about anything you like.
Luke, appreciate that. Thanks for the time and giving us an update on the company. Keep up the progress, and we're looking forward to having you back in 2025 to update.
Yeah, that's great. Thanks a lot, Andrew.